Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I provide divorce mediation and valuation services in St. Louis, Missouri. Today, we are going to discuss passive appreciation in separate property in divorce and the external market forces with Dr. Ashok Abbott. He's an associate professor of finance at West Virginia University and founder of Business Valuation Incorporated, where he provides value by determining statistical significance, validating economic models, establishing causality, and providing rigorous empirical support. So major research. Well, and one more question I think we have today is, what typically changes the index levels of income and employment and why?
Right. See, whenever we talk about an index, we are talking about a base number and what the change is from that number. Like Dow Jones Index, for example.
Sure.
Everybody looks at Dow went up, Dow went down. We are at 30,000, we are at 28,000. We're at 20,000. What has happened? So what has happened? At one point, essentially, they said, okay, as of this date, this 35 stock basket, if it was $1,000 worth, how much is the 35 largest industrial stocks today? How much are they worth compared to that? And that's what this, when we say Dow is 30,000, we're saying that $1,000 has become $30,000.
Sure.
That's all we're saying. So an index is simply a comparison to a point in time historically. So the index value is set at 100 when the index starts, and then you keep on comparing that value. So with population, for example, it would be the population has gone up from 1 million to 5 million over these 20 years. Okay. So your index is 500% of what it was. Employment, again, the same thing. It's if people were gainfully employed 100% of the time, what population of that group is now employed or not employed? See, so the interesting thing is that, again, in the details, when we talk about unemployment running at 3%, 5%, 10%, at the height of the pandemic, 18%, what are we talking about? We are not talking about the total population of that, how many are unemployed. We are looking at the working age population, people who are looking for work, how many of those are unemployed? Okay. So when someone stops looking for work, they drop out of this information. They're no longer, the percentage is not being calculated out of that.
Right.
So the companion index that is available is what percentage of working age population is employed. And there again, there are very significant differences among different subgroups. I mean, the first one being, of course, men and women.
Right.
Of the working age men, at any point in time, the percentage that is employed is 20 to 30% higher than working age women percentage that are employed. Okay. So fundamental saying, unemployment went up from 3% to 5%, things must be bad or things may be good, is very different. You're looking at who is buying your product. And in that group, what is the unemployment, what is the employment, what is their average income? That's going to make a big difference.
Like if your product was going to like working moms or something, the unemployment, so they're out of that.
Right. Their unemployment you should be looking at. See, during the pandemic, the rate of unemployment for women was about 3 times at the very bottom of the pandemic, the unemployment rate for women was 3 times the rate of unemployment for men. So if you just took the unemployment index and applied it and said, well, this percentage is not employed, therefore we expect this much drop in sales or revenues for this business, not quite true. Depending on who's the buyer. Like, just look at the women's apparel store, men's apparel store. When the unemployment for women becomes 3 times that much, and on an average they spend between 2.5 to 3 times as much, proportionate decline in revenues for women's apparel stores is going to be significantly higher than for men's apparel stores.
Right.
And as even when the pandemic lifts, if work from home continues, you know what's going to happen to apparel stores.
Well, sweatpants are going to be really popular. They're going
See, the new
athletic
name for
wear.
that, right? Athleisure.
The athleisure, yes.
Yeah, athleisure is the new word for that. And so those stores are doing pretty well. Those stores selling through Amazon are doing extremely well.
Right. Well, and I think that globally, as we're talking about all of these economic factors, you really just can't assume that whatever your experience is what's happening in the world. You have to look at the data. You have to look at this particular company, its location, its industry, all of that, and then logically talk it through, right?
That's the important part. The more you go into details, higher the quality of your analysis becomes. And that's the really critical part, is to be knowing where you are, who you are selling to, what are the other products they're buying, where is that income coming from, how much of it is getting spent. So that information has to be, that is why really you cannot do an active passive analysis in isolation from the valuation of the business.
Well, and do you think, just talking to the owner, do you think that they even perceive or understand all of these factors?
That was surprising. When you start talking to people, they do not like to admit that, of course, in the beginning. But most of the time, they do have a fairly good intuitive. They may not know the numbers, but when you say, who is buying your product?
Right.
What age group are they? What, in some cases, some products are very ethnically specific.
Right.
So what ethnicity is it? Okay. Where do they live? Urban, semi-urban, rural. So a lot of that information, they have an intuitive understanding of that, especially if they're successful. They know who they're selling to. And that is where you really need to do an in-depth interview. Sometimes if it's not an individual that's running the business, but a team is, you need to really spend some time talking to them. And when I say talking, not talking, but listening to them. They can give you much more information.
Yeah, I think they can give you the keys that you need to then go out and look at the data and interpret it. Right.
Because otherwise, if you're simply data mining, then your conclusions are subject to challenge.
Right.
But if you what you need is a touchstone. The analysis has to be the touchstone, not a fishing rod.
Sure. Absolutely.
You don't just go out and look for, okay, what seems to be correlated, and then come back and say, okay, how would I explain this?
And definitely don't go look for data that just supports your position.
Because the other expert is going to have the data that contradicts your position.
Correct. That's what a lot of times I'm telling clients. I'm like, I'm just trying to find the data that the other expert might find as well. Because information's information.